All right, what's going on? Tom Moffat here with the Commission Breath podcast. Today I'm flying solo. Brandon is not here. And the reason being is because I wanted to get this off to you as soon as possible, as this is an opportunity that will come and go. So by the time you hear this, it's probably going to be on the tail end of it. And you've probably seen this all over the Facebook groups, and every other broker is talking about it. Fixed rate penalties are at the absolute lowest that they can be right now. 3 months interest. It's not all fixed rate mortgages. If you bank at a certain green big bank, then yes, all fixed rate mortgages at the time of recording this are defaulting to a 3 months interest. Now, other lenders, it's a really hit and miss depending on the posted rate. If you can recall one of the past episodes we had with Matt Imhoff, he is the prepayment penalty mentor. So he knows everything that is to know about penalties and mortgages in Canada. He knows a lot of shit, and it's really, really good information. This episode is going to touch a bit on that, but more importantly, the sales and marketing side to that. Like, what do you do with that information? How do you go and find business today? So, what I'm going to walk you through here today is what I've been doing over the past week and stuff that's really been working for both of us in our business. And we're finding deals right now, and it's awesome because it's right there in front of us. It's really great, fun deals to work with because it's mostly past clients that we're working with right now. So, why don't we just start off the top? I mean, let's just do a brief overview here for those of you that didn't listen to the episode or have been living under a rock and have no idea what's going on with fixed rates. So, right now with posted rates, I'm probably going to butcher this. I'm not a pro with this by any means, but all I know is a lot of mortgages right now with the big banks, even monoline lenders, because of where the posted rates are at right now, penalties, some of them are defaulting to a 3 months interest penalty. There's some lenders where a lot of their mortgages are, some lenders where the door is kind of closed already. So really depends on the lender, the term length, the posted rate at the time of getting the mortgage. So how do you determine if you can really just find these mortgages and determine if they're really going to be worthwhile pursuing? Well, that was a question that I was kind of like asking myself for quite a while. And the reason why I'm kind of late to the party on this is because I was always hesitant on reaching out to clients and saying, "Hey, I have this opportunity for you." And then the next day we go and we try to pull off this refi. And then lo and behold, we're kind of shit out of luck because the penalty's gone up based off of the posted rates have moved. After educating myself, I realized that you can kind of freeze the mortgage penalty where it's at by ordering a payout statement. So this was huge for me. This is kind of like the light bulb moment for me to realize, fuck, I'm leaving a lot of money on the table by not pursuing this. Let's say you're going through your database and you're like, hey, I think I see a couple opportunities here that might be a good fit. The first thing you want to do is determine if the penalty is going to be either a 3 months interest or an IRD penalty. The best way to track that is if you're part of Matt's program, then he has all of these different tools for that. I opted not to go the route of trying to learn all of this stuff because, quite frankly, I would rather not, I don't want to say waste my time, but I'd rather not spend a bunch of my time learning penalties. I would rather leverage someone that is in it, learning it, and knows what they're doing. So I reached out to someone that's part of his program. And I'm like, hey, do you want to help Brandon and I by going through our database and finding these opportunities? If you find these and we find these mortgages, you're going to get an X percentage of the cut of the commissions. So she was down to do this, and she has found at this point 10 to 12 opportunities. I've reached out to four. Two out of the four so far are pursuing it. Out of the ones that I've reached out to, I'm waiting to hear back on another two. And Brandon, I'm not sure about him. I know yesterday he was saying two people are pursuing a refi with him. So that's four deals so far. And we just started this last week. We're really trying to squeeze this in over the next couple of days because, again, this is a small window of opportunity that is right there in front of you. And if you haven't explored it, even if you don't have a database, then please listen to the rest of this episode because it's going to be time sensitive. Again, if you're listening to this in the past and the window of opportunity has already come and gone, I'm still going to go through some sales and marketing tactics that we're using to get more of this business. So you can probably take away some tips from this as well. So I elaborated on a tip that was a light bulb moment for me. And I kind of glossed over that, but let's dive into that. So this light bulb moment was this person that's helping me comb through my database. She said the trick is every lender has a certain time frame into when you order that payout statement. So whenever you order that payout statement is when the clock ticks as to how long you have until you can close on that mortgage that new one, and break their current mortgage. And you're going to be sitting on that same penalty that you were quoted on with that payout statement. So let me just put this into clear words. If you order a payout statement with one of the lenders, let's just say, I'm not even going to name any names here, but let's just say we have a main bank lender and their payout statement window is 30 days. So what you're going to do is you're going to have a lawyer order the payout statement in advance before you get the mortgage instructions, and you're going to have 30 days to then complete the refi. So this was the light bulb moment for me. I was like, aha, now I know that I can freeze the penalty even if posted rates move up, or sorry, move down, I think. If posted rates move, I'm not worried about IRD penalties coming in and ruining the whole plan, the whole strategy. The payout statement was key. And one thing I'll add to that is every lender is different in terms of how long you can hold that payout statement for. Some are 30 days, some are 2 weeks. So you really have to strategize with those lenders that are 2 weeks, specifically some monos that we're working with right now on it. They're only 2 weeks. You're going to want to have your file pretty much ready to go before you submit and order the payout statement as you're kind of going through it, because you want to have that 2 week window. And it just so happens the lender that this makes sense with for the new mortgage is a quick close promo right now with one of the big banks. If you use them, you know exactly who I'm talking about, but you also have to open up an account with them. So that's the tricky part, is there's a small window here where you have to get the rep from the bank to reach out to the client, open up that account. So you really, really got to stay on top of it. So what I recommend doing in that situation is when you're going through the refi and you're reaching out and you're submitting that new mortgage with that big bank lender, again, 3-year quick close promo. If you want to know who it is, reach out to me. And during that frame, you want to ensure that you reach out to that rep with the bank to make sure that they're booking that meeting with the client to open up that account. Because if that account isn't open before the closing date, if you push past that payout statement window, then you're screwed. The penalty might be higher. The IRD may have kicked in. So I hope I'm making sense here, but essentially there's a lot of moving parts here. But it really is a lot more simple than I anticipated. So my first one that I've submitted, it's closing 2 weeks from now. We have that 30-day window. Clients are super pumped. I'm adding more value to them. I'm saving them money and we're getting paid more. We're probably going to make about 70, 75 basis points on this. So even after paying the person that's helping us, it's still worth it. So I'll touch on some marketing ideas here. So the first thing you want to do is when you reach out to the client after you've gone and done all of the back end work to make sure that this is even viable for the client, you definitely don't want to reach out to the client before you've done the math. So please do the math on the back end. Figure out the penalty. If you don't know how to do that, get someone to help you with that. Once you figure out the penalty, plug it into your budget, make sure the numbers make sense and that it's actually worth doing. Once you've done that, here's a third thing that I am now realizing. Luckily, I've been lucked out thus far, but I can see this being a sticking point. I was going through the third one and I'm like, man, you know what? They purchased a year ago and I know that area of the market has been hurting right now. So the property values have gone down. So one thing you want to make sure is for this refi, you want to make sure that it's going to appraise for the value that you need. So it's shitty. Yes, it could end up canceling out the deal. But what you want to do is the cool part is this would be a touch point for that realtor. If it's one of your realtor partners, cool. You're building up that relationship more. You're showing them some added value, and you can start tapping into the other marketing strategy that I'll talk about here. And the second point is if this realtor partner you haven't worked with before, this is another great way to book a meeting with them after. And what you're going to do is you're going to reach out to this realtor and you're going to confirm an approximate value of that home today and make sure that you can proceed with the deal. So after you've done that, then you're going to reach out to the client. So when you reach out to the client, you want to have this email clearly outline what the benefit is to the client. So you're not going to go into the weeds of how IRDs work, posted rates, like none of that garbage. Don't even say, hey, how's it going? You're just going to be like, hey, I have an amazing opportunity for you right now, a small window of opportunity. Here's what we can do for you. And you have a potential savings amount of this, or you can shave your mortgage by this amount. So you can have two lines because, again, one client might want a savings opportunity from a monthly cash flow, and the other client might like the idea of just keeping the monthly payment the same, but reducing their amortization. So you're going to budget out those two calculations and you're going to want to present that in an email in a clear, digestible form short, to the point. Don't have a bunch of paragraphs in there because they're only human. They're going to gloss over whatever it is. And the subject line is going to say something along the lines of, we have an opportunity to save you X amount of dollars on your mortgage. That's it. Keep it simple. It's worked very well for me so far. And again, I think it's because you're not going to the technical aspect of it, and you can start diving a bit into that once you have the first conversation with the client, because they're going to want to know, like, okay, what do I have to do in order to proceed with this strategy? So that's when you'll talk about, like, hey, you know what, we have to act quick on this, and here's what we need to do for the next steps. And so far, the clients have been very responsive to it. They're motivated. They want to save this money. So I've gotten everything in pretty quickly, and they're past clients too. So it's pretty warm and fuzzy. I'm not worried about them shopping anywhere else, and it's a quick way to earn some more income before the end of the year. So now that we've reached out to the client, we've got the green light from them. You're going to rinse and repeat this. You're going to go through your whole database over the last year or so, and you're going to look at all of the fixed rate mortgages. What I've been doing is looking at anything over 5% with 3+ years left on the term. I don't know if that's perfect or not, but I looked at those and I said, okay, cool. I'm going to list all these out, and I'm going to send that over to the person that's helping me. She's going to run all of the penalty calculations, and she's actually building out the budget too. So I'm paying her a good amount of money to do that, but for me, it's worth my time because I know if I didn't have her doing that, then I probably wouldn't get it done. So now we're going to want to really leverage this. Now that we have the model, we know what we're doing here. This is all going to happen within the next couple days, next week. I highly recommend doing it. I know it's a lot, but it's worth doing. What you're going to want to do is you're going to want to leverage your referral partner databases. So, what I've already done is on our Friday email last Friday, we sent out a realtor email explaining the opportunity. So, we had a couple put their hands up. I'm going to be honest, there wasn't too many that jumped on board, but that's fine. For whatever reason, maybe it's because they have other mortgage brokers that they work with that they didn't want to really mess with their database on it. That's completely fine. We had two that raised their hands that said, hey, I want to jump on this opportunity and help my clients save money as well. And one of them posted on social media exactly what we explained to them. They had someone reach out. I just got on a discovery call with them this morning. This client has 6 properties, 5 rentals, and 1 owner occupied. I don't know if I want to go into the weeds on that one, to be honest. Usually I try to just stick within 1 to 3 properties, but he seemed like a cool guy, and there could be maybe 2, 3 mortgages there that we can optimize. So I'm probably going to pursue it, but that's a lot of underwriting work. I don't know. We'll see. But nonetheless, that worked to a degree. And the really cool thing I just did this morning was I did the same email, but tailored it to financial advisors. And I sent that out to my FA partners that I just had a meeting with over the past 3, 4 weeks. And I had 2 people raise their hands so far. It's been about 4 hours since I sent out the email. So hopefully I have a couple more that raise their hands. But the really cool part is their databases are usually bigger depending on the type of financial advisor you're working with. If it's an insurance FA, then they're going to have a pretty big database. So the one that raised his hand has a pretty decent database, and we're working on crafting an email together to have that send out to his. So I'm optimistic that we can maybe find a couple more deals there. But even if it's 1 or 2 deals, that's, let's say it's 1% mortgage, 500K, that's an extra 10K right there. So the last thing here that you want to do is something that I didn't really focus too much effort on, because again, I just wanted to get this out there. But if you're someone that's big on social and you have the following, even if you don't, I would probably do this too, because it probably won't take you too much time. I would get this out on social. Again, think about what's in it for the person that's reading your post or watching your video. Just maybe showcase an example of a budget that you just helped a client. Like, one of my clients, we're saving $24,000. Like, it's not small pocket change. It's a lot of money. Like, what I would do is I would showcase a budget for that client that I just saved 24K on. And I would do a screen share and outline the savings and what they had with their mortgage. So obviously not too much detail, but you would just say, hey, they had 3 years left on their term, an interest rate of 5.5%. This is the amount of money we're saving for them now, and this is their new monthly cash flow. Whatever that value add that is that you gave to that client, just outline that in the video and have a clear call to action for that person to reach out. I posted one on LinkedIn and one on Facebook, and then I stopped there. But I would recommend going a bit deeper on this. And hopefully, by the time you get this, posted rates and penalties are still in our favor to perform this, and you're doing your clients a service as well. So I'll leave it at that. If you guys have any further questions, send me a DM. And if you want the email that I sent out to my financial advisors this morning, send me an email. My email should be in the show notes down below in this episode. Cheers.